7 stocks I'm buying, January 2025 edition. Welcome in, folks. 2025. Let me first say, I hope everybody watching this has a tremendous 2025. I hope you really enjoy it. With you and your family, I hope you guys are healthy, wealthy, and pretty darn stealthy in 2025. Okay, we're going to talk some stocks in this video, some pretty big opportunities I see out there in the market, and we're going to talk about what stocks I'm actively putting money in right now. Okay, now, real quick, I think this is worth mentioning. Make sure you stay focused in 2025 on the long term. Don't get caught up in all the short-term stuff. There's going to be a lot of drama this year. There's going to be a lot of worries about this, about that. And you just got to always stay focused on the long term. Make sure you're adding to positions that you're happy to be in and buying stocks that you're happy to be in for the next 3 years, 5 years, 7 years, 10 years, right? And not getting caught up in the day-to-day price action that's going to be out there, because it's going to be volatile, which could create some great buying opportunities throughout the year, okay? And a lot of money to be made on both sides of it, okay? Appreciate y'all for being here. As always, is one thing only I need from you guys year after year. I appreciate y'all for doing it. It's smash that like button. As a sign in my garage says, smash the like button and hit the subscribe button if you want to be subscribed here to the channel. Appreciate each and every one of you for being here as always. And I finally got my license plate in, man. Been waiting for that baby forever. So, ooh, I like it. I like it a lot. If you're ready to take your investing level up to a much higher level in 2025 and you're ready to take investing serious and you want to apply to join my private stock group, I'll put that as pinned comment down there today. Access to all of my premium course library, access to my exclusive Discord chat, 6 and 7 figure community, all that good stuff, plus our research platform, which is 1000xstocks.com. Okay. Alrighty, guys. First stock of these 7 stocks up here I'm going to be buying is SoFi Technologies. Ticker symbol on this one, SOFI. SoFi Technologies. The way I would think about SoFi Technologies is, one, they're a fintech company, and two, I would think about them as a new age bank that's digital first, not branch focused like the old traditional banks of like Wells Fargo, Bank of America, JP Morgan, those sorts of older bank companies, right? They're digital first. They really attract a lot of the millennials, Gen Z, and I think they're very well positioned that when Gen Alpha goes to get bank accounts, I think there's going to be a whole lot of them that are going to be signing up for SoFi Technologies. They set up phenomenal when it comes to that. Now, when you look at SoFi here, right, look at the revenue chart of this company over the last number of years on a trailing 12-month basis. We're looking at 1000xstocks.com right now, right? Look at that. I mean, the moral of the story is, if you don't know much about stocks, usually when you buy companies that their revenue just goes up and up and up and up and up and up and up, you're usually going to do very well in that company over a 5 to 10 year span. Like, I don't know if I've ever seen it where a company's revenue just continues to climb quarter after quarter after quarter after quarter, and their trailing 12-month revenue looks like that, and the stock doesn't perform tremendous over a 5, 10 year span. Like, they all pretty much do. That's incredible. But it's not just about the top line, the revenue. It's also about the bottom line earnings per share. We just very recently had the flip happen, right? This is where we're at right now. And on a trailing 12-month basis, we have now flipped to positive earnings per share for this company, which is a monumental moment for SoFi. And the reason being is this company was nothing but a money loser for the longest time on the bottom line. They lost a fortune, right? People would always point that out, and that was definitely a very big negative. But I've gotten involved with SoFi in 2024, and I'm still excited about this stock in 2025, mainly because of this flip happening. I look at the revenues, I look at the way the business is trending, I look at the next 5, 10 years with this company, and I'm like, they just flip into profitability. I think this one has a long way to run over the next several years. Now, one of the most important metrics you can have a look at for something that's banking related, remember, SoFi is not just a bank, it's also, really fintechy, right? But shareholder equity, always going to be very, very important. Where's the balance sheet at? And shareholder equity is looking better than it's ever looked in regards to SoFi Technologies. Now, to push back against SoFi, somebody might look at this and they might say, yeah, exciting. They flipped to now profitability. Revenues continue to climb and climb and climb and should climb for the next decade, if not several decades, right? That's exciting. But you would say, look at the forward P. 65 forward P on the stock. Keep in mind, they'll probably do better than what analysts expect. So maybe the forward P is like 55 or 60 or something like that, right? But you look at it against Bank of America's at 12 and Wells Fargo's at 13. So you look at something like that and you say, SoFi's very richly priced, it's overvalued, those sorts of things. But the thing you got to understand here, okay, that's very, very important. Look at a company like Wells Fargo. Does it look way cheaper than SoFi? Sure, right? We can say SoFi's at about four times the valuation of Wells Fargo, right, in terms of forward P. But look at Wells Fargo, right? next year earnings per share growth of Wells Fargo is supposed to be 3% versus SoFi is supposed to be over 60%. Yeah, I think that's about 20x. Look at the current year expected revenue growth for Wells Fargo, basically flat. Next year, 1%. And you look at SoFi's at 23% and 17%, right? So you look at it from that standpoint, and you're like, okay, I can understand why SoFi is obviously a much richer forward P. The main thing I would be asking is, should SoFi be trading at a much higher forward P given the fact that the growth rates are so far ahead of these other companies, right? Now, as far as me personally, what am I planning on doing with my SoFi stock? Well, I'm planning on adding more SoFi stock in different portfolios, right? This is a position I have in the public account, 3,700 shares, up 125%. On that now, up $33,000. So basically, I'm up more in the stock than I put into the stock. I put 26,000 in, I'm up 33,000, right? But I have no desire whatsoever to cash any of my shares that I made profits on here in the public account. Anthony Noto's done a heck of a job running this company, like top tier job. Incredible job Anthony Noto's done. And so getting them through everything they had to get them through, the student loan pause, interest rates, inflation, everything he had to get this company through. Rona, I mean, it's incredible. And to get this company out to the other side and now emerging as a profitable player in a fast-growing fintech space and banking space, right? That's special. So, moral of the story, SoFi's looking really, really good. Happy shareholder and looking forward to the future in regards to SoFi. Next stock up here, number 2 of 7 that is a buy is AMD, Advanced Micro Devices. This is a stock that's $120-something right now. Recently, it was trading under $120 a share. It's had a pretty rough year, down about 10% over the past year. Now, in regards to AMD, it's incredible because you've seen a lot of people sell out of the stock over the last, several months, right? I believe they're making a huge mistake. And I believe a lot of these people that have been selling the stock over the past few months, right, are going to come flying back to the stock sooner or later. And the reason being is AMD is going through a very exciting opportunity right now. The trailing 12-month revenue, right, you look at that versus current year expected revenue versus the next year revenue growth, and what do you see? A continued growth acceleration phase we're getting into in regards to AMD. It's extremely exciting. And we don't know where the top is for AMD. Maybe it's 2025. Maybe it's not till 2026, 2027 in terms of this revenue growth acceleration. They could have quite a while to go there because do remember they're playing catch up in the AI space, in the data center space to NVIDIA, right? And so I think there's going to be a lot of catch up to be played over the next several years. And a lot of people believe that AMD won't even start to see the really huge numbers until 26 and 27, right? 25 is just kind of an appetizer for the main course that's coming in 26, 27. So this is very, very exciting time to be in this company. Additionally, look at this. This is on a trailing 12-month basis looking at AMD's revenues, right? Here on 1000X. And what do you see? There was clearly a flatlining for quite some time in regards to revenues, right? That's very self-explanatory there. You don't have to be a stock market genius to be able to look at that and be like, oh yeah, they were basically stagnating revenues for a while. But just very recently, this is where we're at right now on a trailing 12-month basis. Revenue has started to go up again. And this is a projected trailing 12-month revenue and what's expected to happen there, right? So the moral of the story is here, folks. People selling here in the second half of this year, I think, are making a big, big mistake with the stock because we're just at the infant stage. We're at like the first inning of the growth turnaround for AMD. And it's likely going to be a several-year growth cycle for AMD. So to be selling the stock here, I think a lot of people are going to look back and be like, what the heck were we doing? We should have been buying every share in sight right now, right? Now, additionally, you see the gross margins of this company. They troughed, probably 6-7 quarters ago now at this point in time. Gross margins were 42%. And they continue to go up. Now they're pushing 50%. I don't see that slowing down. I see them pushing to 55 to 60% gross margins, which is still nowhere close to like the 75% as gross margins NVIDIA is commanding. But I do believe they still got a ways to climb from where they're at to more like that 55 to 60% range, right? So this is another factor that, do you really want to sell a company when their revenues starting a skyrocketing cycle, the gross margins are, the net margins are, come on, man, that's wild. Now, additionally, what I'm showing you right now is earnings per share on a trailing 12-month basis. This is where we are right now, okay? And this is what's projected to happen here over the next bit of time, according to analyst expectations. And I think actually analysts are a little too bearish in regards to projections. So I actually expect the numbers to be quite substantially better than this. The moral of the story is, like, AMD is a steal deal here. Now, I'll read some projections for AMD. I have them doing revenue growth in 2025 about 30%, and net income growth should be around 200% roughly in 2025, right? So you're going to see this company's net margins get to a more healthy place, let's say mid-20s. So here's about 26, which, keep in mind, still a mile and a half away from NVIDIA. NVIDIA's been, net income margins have been around 50% recently, like just off the chart ridiculous, right? So they're going to get to a more healthy state here. I have them doing 25% revenue growth after that and 35% net income growth after that, right? And getting their net income margins to, let's call it low 30s come 2028. A 30 to 50 P is fair for AMD. That puts a stock in 2028 somewhere between $400 and $650 plus dollars, right? Which gives you a compound annual growth rate on the low end of 30+%, on the high end of 50+%. So the moral of the story is here in regards to AMD, this stock is a buy. Oh, and they have one of the most impressive CEOs of the past decade in Lisa Su leading this company, and she doesn't seem done anytime soon, right? Additionally, they have now a good balance sheet, and they continue to make some very strategic acquisitions to put the company in a much better position to fight over this next decade, right? I did a video recently here on the channel called Buy AMD Stock and Don't Stop. If you want very in-depth analysis on AMD, that's a 32-minute video just dedicated toward AMD there. You see it in the thumbnail there. Buy every share you can. And that's really the way I view AMD. And that's a very significant video there. And the reason being is that's part of a series I did in 2024 called Buy This Stock and Don't Stop. And these are stocks I featured on the series in 2024. Shopify, Palantir was $20 at that time. Palantir is like, what, $80 or so now? Tesla, which is now $400 plus dollars, it was $180 at that particular time. Nike, which is around the same price as it was at that particular time. Celsius, and then ELF, which at that time was $101, and now ELF is pushing, close to $130. So there was a very significant video there to be featured in that series. I definitely think it's worth a watch if you really want to get into AMD stock nitty gritty. Okay, now, here's the deal, okay? 741 shares I'm at in the public account right now. I don't think I have much time left to buy the stock in the low hundreds where it's at right now. So I'm moving with a lot of urgency in regards to AMD. I'm acquiring shares very rapidly. I would love to be wrong. And let's say I have 6 months to continue to buy AMD in the low 100 range. Let's call it 120, below 120. I would love that to be the situation, to continue to add to AMD for the next 6 months. But I have to be honest with you guys. I don't think that's much of a reality. I expect AMD stock price to strengthen as 2025 goes along, more and more and more as the year ticks on. So I hope it stays down, but I don't think it is. And so that's why I'm adding this stock very, very aggressively right now. Number 3 of these 7 stocks up here is ELF Beauty, ELF on this one, cosmetics company, and their company is growing into a cosmetics giant. Now, what do you see in that stock price there? I'll give you a second. Tell me what you see. You see a stock that obviously got heavily damaged. The stock went from $200 down to $100. It got cut in half in 2024 at one point, right? I believe there's a lot of growth worries around ELF that are not substantiated, right? And so the 1 year on the stock, it's down, we can call it close to 10%. Meanwhile, you look at the company's business model, and it's an animal, man, an absolute animal. Look at the trailing 12-month revenue of ELF. Boop, 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 and crazy. And here we are. A lot of analysts are kind of thinking growth is going to somewhat stagnate over this next year, right? I just don't see that happening. I don't see that being very realistic. Based upon the numbers, based upon the management's commentary, it doesn't sound like it, okay? Now, look at the earnings per share. This is where we are at right now, okay? What's going to transpire for ELF in 2025 and over the next 5 years, if we can call it 2025 all the way to 2030, is we're going to see, in my opinion, a massive earnings per share growth cycle that's going to start in this company. Think about it this way. The last 5 years for ELF were all about revenue. We're all about market share. Revenue, market share. More stores, more doors, right? The next 5 years, ELF's grown into a more mature company, It's about margins. It's about earnings per share. It's about the money. It's about the profitability, okay? Now, they've captured this massive market share, right? Well, massive is a relative term, right? It's massive market share compared to what they used to have 5 years ago. But now that they've done that work, now they can worry about profits more so, right? Because that really hasn't been much of a focus for the company over time, right? Now, shareholder equity is the best it's ever been for this company, right? So balance sheet's looking stronger and stronger and stronger, which puts them into a better and better position to acquire other companies if they want to do so, share buybacks if they want to do so. Eventually, they'll probably start paying out a dividend. Probably not in the short term because the growth is too strong still in this company, but I wouldn't be surprised if a few years from now they start paying a dividend for this one, right? Now, here's some projections I have for ELF, right? So the earnings, the net income growth is going to be pretty substantial in 2025. So, we could probably put net income close to $200 million in 2025, right? On revenue, about $1.5 billion. After that, I have them doing 20% revenue growth per year. And then I have them doing 30% net income growth per year after that, right? Which puts them at net income margins of 16% come 2028. I think long term, they're going to get to 20% plus, by the way. Now, PE 35 to 50 is pretty fair for this company. I mean, at the end of the day, cosmetics, beauty company, almost like a SaaS type business model in terms of like people run out of something, they go buy another one, right? So you should always command higher multiples on these sorts of stocks, especially when you've got, very nice double-digit growth that I'm expecting for ELF, which puts the stock in 2028 somewhere between, let's call it $250 and maybe even potentially up to $350 plus dollars, right? So at 131 buying it today, it's a pretty attractive risk reward. And when you think about the risk side of ELF, is there a lot of risk in ELF? Not really. The stock's come down so much, it de-risked a lot, right? And unless, I don't know, everybody just decides to stop buying ELF products, like they're looking pretty darn good in regards to this one. Now, there's a position I have in the public account. I've done tremendous on it, up 1,700%. But I just bought shares, not in the public account, but I bought shares in another portfolio. And that might be a hard thing to do psychologically because, up so much on the stock. But at the end of the day, here's the way I think about it. It's irrelevant. Like all that matters is what my likely returns are, the risk reward profile of that stock over the next 3, 5, 7 years, right? So it's unbelievable to see that gain. But at the end of the day, the stock is still actually a buy here in the low hundreds, okay? Next stock up here that is a buy is Nike. Ticker symbol this one, NKE. If you watch my channel a lot, I spoke about Nike a lot recently. This is one I've been adding to very aggressive here recently, right? Stock's down about 29% over the past year. Now, this is the end of, at least my opinion is, this is the end of a 3-year brutal span for Nike, right? Where stock went down 29%, 6%, and 28%, right? Company had a lot of missteps. They had a bad CEO in the role at that particular time. They now have the new CEO running this company for the last couple months. And I'm expecting a lot of, this called big, good changes in 2025 and 2026. So they had a CEO that was running the company into the ground. And then additionally, on top of that, the consumer got wrecked by inflation, right? So that really hurts a consumer brand that's a global brand like Nike, because at the end of the day, if people can't afford to go buy a new pair of Jordans, like you can't buy a new pair of Jordans, right? So it's the end of a brutal year span, but this is a fascinating move because, stock's down 28, 29%, right? And it's very rarely ever had worse years than that. If you look, 1997 was one such year that had a worse year than this, right? And obviously 2022 is around the same fall, right? But 1997, the stock fell 34%. 1993, the stock fell 43%. That's a really tough one there. In 1984, the stock fell 45%. Okay? Now, the reason I show you guys that there, and I do think it's very important I show you this here, is you could think about Nike in terms of this isn't the first rodeo it's had where it's went through a tough time, right? And at the end of the day, you could have wrote Nike off in these years, but you would have been making a big mistake, right? Don't bet against Nike long term. It's a very poor proposition. The stock has returned 42,000% return since going IPO back in the 80s. It's been a tremendous company. It went through a 3-year hard spell, but I think the next 3 years are looking really freaking good for Nike. And so I'm trying to buy every share in sight right now. I love the business model. I've always loved Nike, the brand. And I think they got, with Elliott Hill now running that company again, I think they got a very bright next 3 years in front of this and much longer term. But I'm just thinking about like The biggest opportunity in Nike stock, in my personal opinion, is this next 3 years. I think the company's set up great for the long term, the next 10, 20, 30 years. But if we're thinking about the biggest net opportunity, it is really this next 3-year span, in my opinion, right? I did a video recently on the channel called Nike stock is easy money. That's a big term because I very rarely ever call stock easy money. I'll say this stock's a buy, this stock's a buy, this stock's a buy, but I very rarely say easy money. Easy money means that a stock has a very low probability of going down 50% over the next 3 years and a very high probability of 2xing or more over the next 3 years. That's how I feel about Nike. So the moral of the story is if we look out 3 years from now, I think there's a pretty high probability I double my money or more than double my money in the stock. And I think there's an insanely low probability I will have lost 50% or more of my money in the stock over the next 3 years. So the moral of the story is Nike, pretty good opportunity. You might want to check out that video if you care more about Nike stock. That covers Nike's 29-minute video there, okay? Number 5 of these 7 stocks that's a buy here is the Cheesecake Factory. Oh, do I love this one. Oh, do I love this one. I'm trying to buy every share in sight. Stock has returned 34% over the past year. That does not include the dividends received for this one. Now, I would say the majority of individuals watching this video right now, you've heard of the Cheesecake Factory before. It's such a famous restaurant brand. I would say it's one of the most famous, certainly in the world, at least, in my opinion, right? Company-owned restaurants, 215 in North America, right? As far as international, they have licensed over 30 restaurants as well. They talk about maybe being able to take it up to like 300 domestic locations long-term in regards to a Cheesecake Factory. We'll see what happens with that, right? But that's great. Cash cow business, very successful. We know Cheesecake, right? Also, super high unit volumes. I mean, look at this, $12 million plus unit volumes for Cheesecake. The next closest would be Meggiano's, 9.8 mil, Yard House, 9.7 mil, Texas Roadhouse, 7.6 mil, BJ, 6.1 mil, Olive Garden, 5.6 mil, right? And then goes down from there. So the Cheesecake Factory concept is a absolute animal cash flow machine, very successful restaurant brand, one of the most successful in history, right? And that's great. Like, that's the ATM machine for this company. But let me be very clear. The reason I'm invested, I kind of think about it like this, right? If you look back to, obviously, Palantir being such a successful stock for me, I never bought Palantir for the government opportunity. I bought Palantir stock for really the commercial opportunity because I always viewed that as a way bigger long-term opportunity than the government business, right? And that's proving to come true now, right? Very similar view that I have of Cheesecake Factory, where you could look at this company, you could be buying it for just a Cheesecake Factory restaurant concept, right? Which is very successful cash cow. But the things that are coming behind Cheesecake are like that Palantir commercial growth, in my opinion, where it's just relentless year after year, and it's going to become much bigger than the current business right now, okay? So North Italia is one of those such concepts. Now, when it comes to North Italia, this is in my opinion, very modern concept, making Italian food that is much needed in the market. Olive Garden, very poor quality at Olive Garden, okay? If you know Italian food well, like, Olive Garden's like not very good Italian food, okay? North Italia, complete opposite. North Italia, you could put that up there with like mom and pop, like really good quality mom and pop Italian restaurants. You could put North Italia like up on that sort of mantle, like very, very high quality Italian food. Now, additionally, they do about 25% alcohol mix, which shows you the quality of the food at North Italia. Because in order to really get people to come spend on alcohol, you're going to be attracting the right type of consumers, and those sorts of consumers usually aren't going to eat the food at the place unless the food's really freaking good, okay? So North Italia, they make such good food, which helps attract consumers that have plenty of money, and those people with plenty of money are more than willing to buy a bottle of wine or a few cocktails while they're there, and those cocktails are, $10, $15, $20. So North Italia has an incredible opportunity here, right? They're going to expand this all over the United States of America, right? And this is a cheesecake type opportunity because they're talking about 200 domestic locations over time, right? And you look at Cheesecake right now, we just went through that. Cheesecake has about 215 domestic locations that are owned by the company. So this is what people got to understand. Like, North Italia has an opportunity to be just as big as Cheesecake Factory, right? And North Italia doesn't have to do as big of revenues because the locations can be a lot smaller, But because the margins could be a lot higher here due to alcohol sales and being able to maybe churn a little bit faster, right? They're actually set up to be just as much of an ATM machine long term as a Cheesecake Factory concept is right now. And I think if we fast forward 7-10 years from now, you would see that, right? But that's the tip of the iceberg. We got a way bigger opportunity this company has. North Italia is not even the biggest. The biggest opportunity, and when I first started buying the stock, I didn't even understand how big of a concept this was until I really went down the rabbit hole with this, and I'm like, oh my gosh, like this is bigger than North Italia. This is going to be bigger than Cheesecake Factory, in my opinion. There's a concept called Flower Child. This Flower Child concept hits on all the places you really want to be in the day and age. It does not have like servers and waiters and waitresses and things like that, right? It's a concept where you go up, you order, there's a beautiful menu there. The food's all very high quality, healthy, a lot of high protein related food. So it definitely meets a lot of the criteria that the modern generations are really looking for, right? A lot of the restaurants are very bright, and they are able to do these in much smaller locations. But the fascinating thing with Flower Child is they're doing about 50% of their sales off premise, meaning somebody orders Flower Child and goes and picks it up. They don't actually eat in Flower Child, right? Which is very different than Cheesecake Factory concept or North Italia, certainly, right? And so when you think about this, you're going to be able to build much smaller locations, which means you can put a lot more locations in other places. When you talk about Cheesecake Factory, the actual Cheesecake Factory, you need a lot of space to put one of those down. Like a lot of space. Flower Child, you do not need a lot of space, which creates a dynamic here where you could make maybe 500 or maybe even 1,000 locations long term for Flower Child. They have not given a specific target, but based upon the latest investor conference, what I heard from what management team was sound like is they believe there's going to be more locations of Flower Child than Cheesecake Factory or anything else they have. And so this is a crazy big opportunity. Is it a Chipotle type opportunity? I wouldn't go that far. I wouldn't go as far to say Flower Child's the next Chipotle, but I would put it somewhere between a Chipotle type opportunity and like a North Italia type opportunity. That's where I would put it. Like this is the granddaddy of them all in my personal opinion, right? And so this will have the most locations in my opinion long term, and this will also have the best margins. The margins sound like they're incredible out of Flower Child as well. So keep an eye on Flower Child, and don't be surprised if 5 years from now you see this in every single major city and probably multiple locations in every single major city across the United States. Huge, huge opportunity. And remember, as the brand gets bigger, it's going to get easier and easier for them to open up day one and already be likely very, very profitable, right? Which is, a lot of people have never heard of this brand as of right now. 5 years from now, I think we're going to be in a very different situation. 7 years from now, I think it's going to be, this is like huge, huge opportunity. Now, additionally, behind that, they own Fox Restaurant Concepts, which all owns a bunch of these other brands: Doughbird, Blanco, Wildflower, Arrogant Butcher, The Greenhouse, Olive and Ivy, which, by the way, they have a great location in Scottsdale. If you've never been to that location, you ever looking to go on a date night with your missus, okay, or your mister, whoever, check out the location. It's kind of by Fashion Square Mall. Fashion Square Mall. It's right on the waterfront there. Oh, beautiful, beautiful location. Anyways, I had a good time there. Flyby, Zinburger, The Henry, these sorts of opportunities, Culinary Dropout, these are in testing phase right now. So they have 47 locations of these. Basically, all these locations are phenomenally run. The food's good. The drinks are good there. They're busy. Like, go to any of these concepts. And if you live in Arizona, you have a vacation in Arizona, Phoenix area, Scottsdale, whatnot, go to some of these locations. You're going to find they're busy and they're phenomenal. But these ones are in testing phase right now, okay? And you got to understand about the restaurant industry. Most restaurants have trouble even making it, right? So that's like a stage, like, can you make it? The second question is, can you not only have one location, but multiple locations in a market, right? The next question after that is, can you take it to more of a regional play? Like, let's say the West Coast of the United States. And the next phase after that is national. Can you go national? Can you go all over the United States? And then the last phase is, can you go international, right? And the biggest brands in the food space have been able to do that. Taco Bell and McDonald's and Starbucks and those sorts of brands, right? Chipotle maybe even going international, right? So those are the kind of the phases. So what Cheesecake Factory is doing with the FRC concepts is they're basically testing these out. They're saying, let's see, like, what if we open up a second location, third location, fourth location? What if we take this to another market, right? And they're basically testing this out, seeing like, can this work in another market? Can this work in another market, right? That's the way you find out if we have another North Italia coming, if we have another Flower Child coming, those sorts of opportunities, right? And so, you look here and they're opening a lot of these, the Cheesecake Factory, for instance, they've only opened up one recently. One, right? All the major growth for this company is in North Italia, Flower Child, Culinary Dropout. They opened 3 locations. So see, they're taking something like Culinary Dropout very serious. Just very recently, they opened up 3 locations of Culinary Dropout. Atlanta, Georgia. Shout out to Atlanta if anybody's watching this. Birmingham, Alabama. And Dallas, Texas. Anybody watching this from Dallas, Texas, okay? So this is like kind of in that testing phase where they're like, let's see several different markets, right? Let's see if this is going to be successful. Because I can tell you the Culinary Dropouts in Scottsdale, in the Phoenix area of Arizona, are very successful. But it's like, okay, can we get outside of Scottsdale? Can we get outside of Phoenix and go to other cities and other states out there and really see, what's going on? So if you look here, 2022, they opened up 13 new restaurants. 2023, 16 new restaurants. Like around 22-ish restaurants in 2024, and they'll probably open, I would say, 25 to 30 restaurants in 2025, right? And I believe after 2025, they should be able to open up about 30 to 40 restaurants a year for honestly, the next, decade. Literally, they could probably add 30 to 40 restaurants every single year for, the next 10 years. If not, take it up to 50 locations. Flower Child alone, as they get more data and they see how successful this concept is, I wouldn't be surprised if Flower Child concept alone, they start doing 20 to 30 locations a year. Just a Flower Child. Then you got North Italia on top of that. Culinary Dropout's probably the next hit, right? Blanco might be the next hit. We'll see, right? Gosh. So you got to understand there's a lot of new restaurants coming here down the pipeline for Cheesecake. And they have the next 10, 20 years just already laid out for them. No, this I think is very important because you always want to kind of look at how did a restaurant perform during the great financial crisis. Now, keep in mind, Cheesecake Factory during the great financial crisis, I would say a much weaker company back then, right? Only one brand. I wouldn't say their financials were nearly as strong as nowadays. So they're a much weaker company, but yet look at how well they got through the great financial crisis. One, their restaurant sales weren't down nearly as much as their competition, right? Additionally, I want you to pay attention right here. This shows you adjusted earnings or loss per share in 2009, 2010. 2009, 2010 was a disaster economy, massively high unemployment, right? Not a good time to be in the restaurant business. A lot of restaurants went under in 2009, 2010. And look at how Cheesecake did. $1.07 in 09 and $1.42 in 2010. Keep in mind, this is a much weaker company back then than the Cheesecake you see nowadays. Look at free cash flow. Free cash flow of $163 million in 2009. Free cash flow in 2010 of $128 million. It's incredible. It's incredible. Now, the great thing with Cheesecake is if the company ever has to go through a great financial crisis type time where unemployment goes to 10% or something like that, right? Cut dividends, cut share buybacks, open less locations, and your free cash flow is going to fly. It's incredible. That's a very, very special company. And it makes me feel very comfortable holding this because most of the time the economy is going to be decent, right? Sometimes the economy is going to be great. And sometimes the economy is going to be crap. And I want to hold companies that I feel can get through whatever, right? Now, additionally, you look at the dividend here of Cheesecake, right? So they were upping it from 2018 to 2019. They upped it from 29 cents to 33 cents. Then they upped it going into 2020 from 33 cents to 36 cents. And what happened? Boom! Government shuts down the world, right? And so that devastated the restaurant industry. We all know what it was. So then finally Cheesecake was able to bring back their dividend in May of 2022. And so far they've kept the dividend steady at 27 cents. I do believe there's an extremely high probability that in 2025 they do go up on that dividend. I think they're probably going to go up to 30 to 35 cents per share you own and that's per quarter getting paid out there. So that's what I believe. We'll see what happens, but I think there's an extremely high probability they're going up on that dividend. Right now, they want to keep a lot of their cash flow to build out locations because that's their biggest opportunity. But it's still great that you get that dividends paid out to you in the meantime, right? It's pretty sweet. Additionally, you look at their latest income statement from their latest quarter. It was in grade A, like a really good numbers. $865 million of revenue versus $830. Food and beverage costs dropped as a percent of revenue significantly. Labor expenses did as well, right? You look at total costs as a percent of expenses went to 96.1%. Before it was 97.7%, right? Income from operations went to 3.9% of revenue. I think these numbers are going to continue to climb over this next year. So I don't think we've reached a top here. And so the numbers continue to trend better. And I think I think that's going to be a multi-year thing you see play out there, right? So that's phenomenal. Now, in regards to cake, this is silly. I mean, it's trading at a forward P of 13, way too cheap. I mean, when we're talking about this company has two basically guaranteed massive growth concepts, coming behind them, there's no reason at all that this company should not be commanding a 20 to a 30 forward P right now. Right now. You're going to see how silly this is going to be over this next 3 years. You'll see. And you'll be like, that was ridiculous. Like a forward P of 13 with those major growth concepts coming behind them. Like, it's not like those are in question mark phase where it's like, is North Italia going to make? No. Like go to North Italia anywhere. And you'll realize quickly this is going to be huge across the whole United States. Go to a Flower Child, any location they have. And you'll be like, this is like no question. Like this is like going to be huge over this next many, many years. So yeah, they'll look back and be like, this was silly, right? So up $25,000 so far in the stock. This does not include dividends. Long way to go in this one. I'm still buying shares, and I might continue to buy shares throughout 2025. I don't think I'm done buying the stock anytime soon. I'm just going to be quite frank with you guys. Long way to go, okay? All right, guys, before we get into stock number 6 and 7 here, I want to let you guys know the second pinned comment down there today will be if you're looking to join my Patreon. My Patreon is different than my private stock group. My private stock group, you get access to all my course curriculums and stuff like that. My Patreon is just, if you're looking to support my content and see the stocks I'm buying and selling each week, and see exactly how I build up a portfolio, plus get access to the Stock Hub Market Hours Discord chat, then you can join in Patreon there. And then that one also has a annual option that you get to save a good amount of money on there. So that will be second pinned comment down there. Once again, if you're looking to just see access to the stocks I'm buying and selling each week with screenshots and all that good stuff. Okay. Alrighty, guys. Next one up here. Stock number 6 of 7 is Winning Resorts. Winning Resorts, a stock that's done a whole lot of nothing over the past year, is down about 2%, right? Wynn Resorts has the premier properties in Vegas, Wynn and Encore. They're the premier properties in Old Macau. They have the premier property in Boston area, which is right outside Boston, right, in the Encore property. Additionally, they have the Cotai Strip property, which is, I think, the crown jewel of the Cotai Strip. And they're building a property right now in the Middle East, which is, a very untapped opportunity. Let's just call it that. Untapped. Oil money? Okay, maybe we're putting some things together there, okay? Very diverse, high-end business. A lot of the top 10% of income earners, top 10% of the wealthy like to go to those sorts of properties if you're going to Macau, if you're going to Vegas, if you're going to Boston, and then when this Middle East property opens up, right? Now, the stock price performance for this company has really been out of their hands over the past 5 years, right? And it's kind of unfortunate. But here's the thing. If you're a Wynn Resorts and you run those high-end gaming resorts and the government says we're closing down the economy, you don't have any choice. And that's the thing that sucks for Wynn. Macau was partially closed for 3 years. For 3 years, right? Vegas completely closed down, my city, right? For at least a few months there. And then we slowly ramped back up. And that took about a year and a half to ramp that business back up. So that was completely out of their hands. And you know what else was completely out of their hands? The Fed going through the fastest hike cycle in history, right? And taking the Fed funds rate up to the highest levels we've seen in many decades. And so those were, when that happens, essentially, no one wants to own any debt-laden companies, which if you run a resort company, you're going to have large numbers a day. You're going to have billions of dollars of debt, right? And no one wants to own those sorts of stocks when the Fed goes wild like that in terms of just raising interest rates. And so it had two very existential issues that happened to its stock price that were completely out of its hands. It's like they couldn't control if the Fed was going to raise rates, like they did. They couldn't control the government was going to shut down the worldwide economy, but they did. And so really this company's stock price has not been in their hands the past 5 years, but I do believe that's going to be very different over the next 5 years. I do not believe we're about to go through any sort of major hike cycle for the Fed, and I do not believe we're going to go through another once in a 100-year health event, right? That's why they call it a once in a 100-year health event. No. In regards to Wynn Resorts here, right, you look at it on a trailing 12-month basis in terms of the revenues of this company. I mean, they've climbed substantially. Now, analysts have gotten, I would say, pretty bearish overall, where they don't have much revenue growth going for Wynn at all, right? And we'll see if that comes true. They might be a little too conservative in regards to 25, 26 for this company, right? Now, additionally, you look at trailing 12-month free cash flow for Wynn Resorts. Whew. I mean, what a change, right? And this was basically government forced shutdowns and all that stuff, right? And obviously they were losing a fortune, and man, had they changed the free cash flow story in regards to this company in a major way. Additionally, just as important, look at the operating income for Wynn Resorts, right? I mean, once again, you don't have to be a stock market genius to look at that chart and be like, dang, that's pretty darn impressive what they've done with operating income there, right? Now, another way I like to think about Wynn is not just like all the money they're bringing in, right? What's going on with their revenues and their EBITDA, right? Because do remember, EBITDA is very important for a company like Wynn Resorts. And the reason being is a company like this takes massive depreciation and amortization every year. Like we're talking many hundreds of millions of dollars every year, which makes them look not as profitable as they really are, okay? So that's why EBITDA is very important for these sorts of resort names, right? Now, enterprise value is very important to look at for companies like this. It's a key number. And you look at that, and the reason enterprise value is it takes its market cap, and then it also looks at cash and investments versus debts, okay? So you get a real better understanding, at least in my personal opinion, of what you're actually paying for the company. So enterprise value is $20 billion for this company. But here's the thing. I don't believe you could build all of Wynn's properties for $20 billion. I don't think it's happening. And so that gives me a lot of comfort in thinking like, let's say you could have the culture and the employee force and the design and everything Wynn has, right? And the unbelievable customer base they have. But what if you just try to replicate the properties? I don't think you could do it for $20 billion. Not with how expensive construction is nowadays. There's no way you're building all their properties, in my opinion, for $20 billion. So that gives me some comfort, right? Additionally, dividend payer, obviously, with this one, and I think the company's going to be paying much bigger dividends over this next 5 years. Like, I think, especially if they don't do the New York property, which I have a lower and lower belief that they're going to do the New York property, the dividends are going to be substantial here. And as far as the land in Vegas, I don't see them building anything on that land yet either. And the reason being is the north end of the strip has two problem properties already having an issue. Fontainebleau is having a lot of issues from what I'm hearing on the ground. Resorts World's having a lot of issues from what I'm hearing on the ground. And so there's already two troubled properties that are pretty new on the north end of the strip. Additionally, they're building more properties next to Fontainebleau right now. So my hunch is Wynn's probably not doing anything with that Vegas land across from them anytime soon, unless they were willing to sell it to somebody that would be willing to pay a big number for that. But and so that makes them kind of in a situation where they got this Middle East property they're going to be building out, but I don't see it being very likely they build out some big property here soon because, like I said, New York's always a mess, right? And so like New York does some things very well, but they do other things very poorly. And it's just I have a hard time believing that Wynn's going to bend over backwards for New York. I think it's going to be too much fighting. It's not going to end up working out because Wynn's going to want certain things their way because Wynn usually gets their way, right? Meanwhile, you have New York City that is used to getting things their way. So I think it's it would be an incredible opportunity, but I see it not being very practical. So then the question is, what is Wynn's going to do with all this money? What's it going to do with all the money? So then you get into a situation where they could pay down debts if they want, or they could continue to up that dividend over the next few years. And that's my belief is they're going to up that dividend. And then when the Middle East property opens and the cash flow start pouring in for that, they can raise that dividend a lot. Okay, 7 stock up here. These 7 stocks is Celsius Holdings, the energy drink company, $27 stock. I'm doing a combo buy this one. Now, keep in mind in regards to Celsius, this is likely the last month I buy Celsius. And the reason being is my position's almost built out where I want it built out to. So it's not very likely that you'll see me continue to buy Celsius after January, essentially. But I'm doing a combo buy here where I'm buying Celsius and buying Monster. And basically putting $1 in Monster for every $2 I put into Celsius roughly. And you can kind of see that, and by the way, why am I doing that? The reason being is Celsius obviously massive growth over the past 5 years, went from a brand no one really knew about 5 years ago to now being, actually a very famous brand in the energy drink category, right? And my thought is, just in case Celsius falters over this next 5 years, I think the biggest one to benefit would be Monster, since they own Monster brand, Reign brand, the Bang Energy brand, and a few other brands as well. So they're kind of an energy drink giant. So my thought is, if Celsius falters, Monster picks it up, right? So it's kind of a hedge play a little bit. But in regards to Celsius here, it's basically almost a perfect kind of 2-to-1 ratio in terms of what I put into each of these stocks and kind of what I'm holding here. So very comfortable with what I'm doing there. I did a very in-depth video, a few months ago on buy ELF and Celsius stock and don't stop. So if you want to hear me talk more in depth about Celsius, you can certainly check out that one there. As far as the health related stuff, obviously a lot of stuff went viral in the past year about, is Celsius healthy for you? I have news for folks like, I don't think any energy drink is ever going to be seen as healthy, right? I used to be an investor in Monster a long, long time ago, like 10 plus years ago. And I remember Monster had to go through the same thing. Like that's part of the process of being a company that sells energy drinks. Like it is what it is, right? Alrighty guys, I hope you have a great 2025. I hope you and your family thrive, wealthy, healthy, and stealthy, okay? If you're looking to apply to join Private Stock Group, pin comment down there. That'll be the first pin comment down there. You can apply to join us in there. Access to all my premium courses. Become a master of stock market, millionaire playbook, stock options mastery, dividend investing mastery, financial statements mastery, exclusive Discord chat. If you want access to the research platform, which is 1000xstocks.com, the best in the world, pin comment down there, fill out an application. We'll see if we can get you access to that. If you're going to join my Patreon, that will be the second pin comment down there. And that's just access to see the stocks I'm buying and selling each week in the Patreon portfolio. Much love and have a great day.